Welcome back, my friends. The news today is that Snap is having yet another big layoff. Snap announced today that it will lay off 10% of its global workforce, which is around 500 employees. Snap said the purpose of this huge layoff is to promote in-person collaboration. The Snapchat maker's last major round of cuts was in 2022, when it laid off 20% of staff. Snap CEO Evan Spiegel testified before the Senate Judiciary Committee last week. It wasn't pretty, but before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Social media company Snap said Monday that it will lay off 10% of its global workforce, or around 500 employees, in part to promote in-person collaboration. The Snapchat maker's shares fell as much 3% in morning trading before paring back losses to close down 1.8%. The company has executed multiple rounds of layoffs since 2022, most recently in November when it trimmed a small number of products. A Snap spokesperson said the cuts were done in part to promote in-person work. "We are reorganizing our team to reduce hierarchy and promote in-person collaboration," the spokesperson said in a statement to CNN on Monday. "We are focused on supporting our departing team members, and we are very grateful for their hard work and many contributions to Snap." In a regulatory filing Monday, the company added that the cuts were aimed to best position our business to execute on our highest priorities, and to ensure we have the capacity to invest incrementally to support our growth over time. Snap said it estimates it will incur approximately $55 million to $75 million in costs related to the restructuring, primarily consisting of severance expenses. Snap had some 5,367 full-time employees as of October 2023. Mass layoffs have roiled the tech sector since 2022, and the job cuts emanating from Silicon Valley have continued to trickle in this year. Since the start of the year, some 30,000 workers in the tech sector have lost their jobs, according to a tally compiled by layoffs.yi. There were some 262,682 tech industry layoffs recorded in 2023, per layoffs.yi data, after 164,969 cuts the previous year. The latest job cuts at Snap come after the company said in August 2022 that it was cutting some 20% of its global employees, equating to roughly 1,200 jobs at the time. The company also cut approximately 3% of its staff last year, after it announced it was shuttering its AR enterprise business, per a regulatory filing. But Snap has not been sustainably profitable since its initial public offering a few years ago. Investors are going to examine tomorrow's report closely, but they will also likely reward the company for announcing the additional layoffs. Snap expects it will incur charges ranging from $55 million to $75 million according to a regulatory filing. The company's last major round of cuts was in August 2022, when it laid off 20% of staff and restructured its business lines. "We are reorganizing our team to reduce hierarchy and promote in-person collaboration. We are focused on supporting our departing team members," a Snap spokesperson told CNBC. The social media platform is the latest tech company to continue cutting in 2024. Nearly 24,000 tech workers lost their jobs in January alone. Already this month, cybersecurity and identity company Okta and Zoom have laid off staff. Snap CEO Evan Spiegel testified before the Senate Judiciary Committee last week, one of several social media executives to face scrutiny over the damage their platforms caused young people. Investors generally support tech companies' efforts to trim back headcount. Meta, for example, implemented a year of efficiency that saw brutal cuts to its workforce. The Facebook owner's stock reached an all-time high after it reported strong earnings and announced its first-ever dividend. Amazon and Alphabet have also pursued similar headcount reductions. Big tech companies had a rough year in 2022 and are more humbled now. They seem to be in more of a mind to provide shareholder value. Like Google and Facebook, Snapchat's revenue is highly dependent on digital advertising spend. The company has stuttered in some quarters, but managed to snap a streak of revenue declines in its most recent quarter. The company has also initiated a $500 million share buyback program. Snap stock remains below its debut price and well off its 2021 high of around 83. But why is that? Snap has experienced fluctuations in its stock price due to various factors. Let's delve into some key reasons. 1. Meta Platforms influence. Recently, Meta Platforms, formerly known as Facebook, reported disappointing earnings for the fourth quarter of 2021 and projected a potential sales miss for Q1 2022. 1. This performance affected investor sentiment not only toward Meta, but also toward Snap. 1. As a result, Snap stock suffered a sympathetic crash, declining by 20.5%. 2. Ad measurement challenges. Investment bank KeyBank lowered its price target on Snap stock by more than half, citing ongoing ad measurement headwinds. 2. These challenges may lead to shifts away from social media platforms like Snap. 2. Additionally, KeyBank warned of margin pressure from investment. 3. Financial metrics. While Snap remains deeply unprofitable based on generally accepted accounting principles, (GAAP), it is approaching break-even free cash flow, FCF. 3. In 2021, Snap's FCF turned positive, and analysts forecast rapid growth toward $3.1 billion in real cash profits by 2025. 3. Despite its current unprofitability, Snap stock is priced at only about 13 times its future cash profits. Sure, revenue misses and slower growth, Snap's share price has experienced volatility due to fluctuations in revenue growth. For example, in July 2022, Snap stock slumped nearly 30% after the company reported slower revenue growth, 13%, compared to the prior quarter's spike, 38%. In October 2023, Snap initially rallied after better-than-expected Q3 results, but pulled back due to management's warning about potential weakness in Q4. Snap's stock performance is influenced by industry dynamics, financial metrics, and market sentiment. While challenges persist, the company's potential for future growth remains a point of interest for investors. Keep an eye on developments and consider long-term prospects when evaluating Snap stock. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.